So it's no secret that in order to buy a house, you have to have a decent credit score. Normally, that's going to be anywhere between 580 to 620 minimum. Now, 580 can get you in the door most of the time, but 620 is really going to set you up for success and the best opportunities. So, in order to get that 620 credit score, what do you need to do? So, stick with me today because we're going to talk about the top 3 things you need to do to get that credit score above 620. My name is Jennifer Monsivais, and I am a real estate agent with LPT here in San Antonio, Texas. Let's get into it. So tip number 1 is going to be to pay your bills on time, all of them. Now, this is something that can be achieved in different ways. I've had people that set up timers to make sure they don't forget. They put it on their calendar. Others put it on automatic payments and just kind of set it and forget it kind of thing. Others make sure that they just pay everything all at one time, whether it's due or not. They just do it all on one time. Whatever it helps you and makes life easier for you, do it. Personally, I think that the automatic bill payment is the best solution if you always have money in your account. If not, there is an option to go ahead and call your bank, like the bank for the credit card or whatever bill it is that you have, and ask them for a date change to your billing cycle or your due date. In some cases, they have more flexibility and they allow that. Other times they don't have that ability unless you do an automatic payment. But it doesn't hurt to ask. What's the worst they can say, right? No. So that's tip number 1. Tip number 2, to make sure that you minimize your credit utilization on your credit card. Now, what is credit utilization? Credit utilization is really just a term that means how much of your available credit are you using. So best practice is to make sure that you keep it under 30% of the credit limit that you were given. So if you have a $500 credit limit on a card, for that one card, you should not carry a balance more than $150. Now you may be thinking, Jennifer, that's dumb. Why would I have $500 credit limit if I can't use it? Well, theory is that if you max out cards, especially with the interest rates, because you pay more and more and more, you become a higher risk to default on that credit card. So best practice, keep it under 30%. So let's use an example. If, let's say, you had a flat tire, you needed a new tire, let's say it was $250. Well, go ahead and charge the card if need be. However, best practice is before the next statement comes in for that credit card, you need to ensure that you pay off that amount, or at least get it back down to the 150. By doing this, your credit score will eventually start going up and up and up. Do it for all your credit cards, and that will definitely help you out quite a bit. And finally, the best thing you can do is protect your credit. Don't allow people to check your score. So ladies, gentlemen, whenever you go shopping, you know how you're at the register, you're at, let's say, Old Navy, Best Buy, Sephora, Ulta even, they all do it. You go to the store and the associate does their job and says, hey, did you know that if you open up a new credit card today, then we can give you 25% off your entire purchase? No, don't do it. Because that creates a credit inquiry. Every time you do a credit inquiry, your score will drop. Now, it will go back up eventually, but it's not something that you should risk or that you should do because it does take time for it to go back up. It's not an instant thing. Same thing when you do credit cards, car loans, any kind of loan. Anytime anybody is checking your credit, where it's a hard pull on credit, then you should definitely decline. Make sure that you say, no, I don't want it, and don't give them the information needed in order to do so. Doing this will definitely help you get closer to that 620 credit score that you're needing to become a homeowner and invest in you and in your family. Now, here is a bonus tip. I know it said 3, so here's a bonus tip. The final tip that I'll give you today is going to be to make sure that you don't allow any of your credit cards to close. Now, this is something that a lot of people don't know about, but if, let's say, you did a good job and you paid off all your cards, you're at a 0. And so, unfortunately, credit card companies want to make money, right? They want people to utilize their cards. So if you go a certain period of time without using that card, some will go ahead and close that account. Some give you notice, some don't even tell you. You may not even realize it until it is too late. But by allowing that card to be closed, that can definitely impact your score because If that credit card, let's say, is one of your oldest lines of credit, one of the, like your first accounts, then that history is going to be gone, and it unfortunately will negatively impact your credit score. So what could you do? One thing that you can do is, once you pay off your credit card, especially if it's one of those credit cards that gives you points, definitely go ahead and use it, but maybe just use it for like gas or something very small, and make sure that you make that payment for it the same day. So then that way it's still low and your credit card won't be closed because you didn't use it. Now, that's all that I have for you today. Make sure that you subscribe to any and all of my social medias. Make sure that you also like this video. If you're liking the content that I am making, I definitely appreciate it. Make sure you make comments and let me know what else you want me to go ahead and make a video of. I'll be more than happy to share. See you guys later.